Hello, everybody, and welcome to the RJO market commentary for the week of February 2nd. My name is Toby Gennaro from Trade with Precision, and we'll just be taking a look at some of the different markets here for the upcoming week. Before we do that, let's take a look at the calendar for events coming up this month for the month of February. Next week on the 11th, we have the RJO webinar, Begin Trading Futures Like a Pro. So we'll give you kind of an introduction to trading futures in that one. Then the following week on the 18th, we'll have trading opportunities for busy people. These will all be at noon Eastern time. That's also a good one that a lot of folks like. And then on the 25th, end of the month, we'll have futures trading. We'll show you trade strategy in that one for trading various futures markets, and that'll round out the webinars for the new month. So without further ado, let's get to the charts and see what's on tap for the upcoming week. And so let's take a look here at U.S. equities. Everybody's always interested in the S&P 500. So I have the ES futures contract right here, which is the mini contract for the S&P 500, basically tracking the cash market. Looking at the daily chart here, along with the 8-hour time frame, a lot of folks track the daily chart on a regular basis. So I want to take a look at that first. But as you can see, really kind of a sideways market here. The market really doesn't want to break down, really doesn't want to punch up. So we've been in a sideways market between this level of right around 2062, where we've had two most recent touches there at a very precise, exact level. Then we've been ranging down as low as 1983 with another touch down here just around that 1970 level, but pretty consistently in this range here for basically the last couple of weeks, and even going further back with this high right here that takes us all the way back to almost latter November, early December, and we still have just kind of peaked through that high, but we've still come down quite a bit and have just been ranging without putting in another high. So really kind of really just a not a very good trend here at all. We're really in a sideways market. You can see that very well on the 8-hour time frame as well, and you can see those levels fit in there pretty well. So we'd probably have to go up to the next higher time frame, the weekly chart, to see how the market's trending and what things look like. I mean, if you've been tracking this market at all over the last 6 years, you know it's going straight up. So we're having a little lag in the action right here. But for the most part, I really want to find out if this level is going to hold now that we've come down here 1, 2, 3, 4, 5 times. Are we going to get another breakthrough, maybe down to this level, and then punch back up and retest this level up here right around 2062? Or do we break off from here? So the one thing we want to concentrate with on these consolidations is the market is going to consolidate here, and it's going to break to the upside or to the downside, and it's going to do so with a lot of momentum. And more than likely, we can use the gauge between these two levels, as if it breaks, that's more than likely how far it's going to run. So we'll usually get kind of a 1-to-1. Basically, 260 minus 1980 gives us about 70, 80 points. We could potentially, out of this consolidation right here, look for an 80-point run to the top side or an 80-point run to the downside, depending upon how the chart's set up and what break we get, either to the downside or to the upside. So let's go back and take a look at some of the higher time frames. We'll take a look at the monthly and the weekly. And as you can see, on the monthly chart, we just had a pullback here about 4 months ago. Nice bullish candle, break of the high. Just last month, the month previous, we had a nice bullish candle there, but never got a break of the high of that, and actually put in a fairly bearish candle right there. And the low of that candle is sitting in right around 1970, and that basically is right around the break of the lows around here, basically the swing low right here, which is basically just slightly higher low than this one right here. And as you can see, we've had a lot of nice bullish candles in and around this buy zone here, and historically, every time we've gotten these bullish candles, a break at the high of these candles has just given us a great multi-week run going in the direction of the predominant trend. So again, right here, a break of the high gives us a nice run before we get a little deeper pullback. And then even though we had a setup candle right here, we got a break of the high and then another nice setup candle right back in this buy zone between the 10 and the 20 period moving average. Once we got a break of the high, markets really took off there until we started to consolidate kind of sideways. You can see in the last, 4 or 5 weeks here, we've really just been in that sideways motion, which we just looked at pretty much on the daily chart. So right here, it remains to be seen if we're going to move back up to that 2050, 2060 level and consolidate one more time, or if we're going to break down through this level. So let's take a look at some of the lower time frames, see if we can figure that out. On the 8-hour chart, Don't really have any bullish divergence here on the charts. We're using the MACD and the RSI indicators to determine that. We'd like to see some convergence if we're interested in going short some of these lower highs and lower lows, which is pretty much the trend moving to the downside on everything on the 4-hour chart and lower. So this looks like a pretty strong trend to the downside right here, but we are back in the buy zone on that weekly time frame. So right here we are getting some slight bullish divergence right here with a double bottoming structure. Could means we could snap back up to this 2020 level and potentially roll over and come down and retest this level. So I'd only be looking to take the break of this flat level right here if we can get another test of that level, maybe get some small candles consolidating at that level, giving us more than likely a break to the downside. Really don't see anything else here on the lower time frames. That pretty much what I'd be looking for from the short side. If we get a bounce back up to the top side, I'd be looking at this 2062 level and then looking potentially for another touch. That'd be a third touch at that level, very precise, and then looking probably for some trending price action going up into that level and then potentially looking for a break higher. So a couple different options there for what might be happening, but really just looking for a breakout either to the top side or to the downside of this overall consolidation right here. One other market that we'll take a look at here is crude oil. Crude oil has been just a huge mover here over the last 5 months or so. And big moves to the downside, as you can see here. We're looking at the daily chart and the 8-hour. All the moving averages rolled over here, the 200, the 50, the 20, and the 10. And as you look back through this little sell zone that we have here created by the 20 and the 10 period moving average, you can see these nice bearish setup candles in the sell zone. And once we take the break of the low of those candles, we're moving with the momentum in this trend, which is to the downside. And even little moves back up right in and around that 10 period moving average doesn't even break up into the zone that far, and all of a sudden the market breaks down again. So we formed a little bit of a bottoming structure right here. We do have some bullish divergence with the most recent low right here at 43.45, and it looks like we're getting a bounce off here. Have a pretty nice bullish candle right there, but we do have price right back in the sell zone on this daily chart, which means I'd like to see the close out of that candle and see if we might get a series of maybe very small bearish candles right there before we get maybe a breakdown, possibly to retest this low right here. But for right here, if we move over to the 8-hour time frame, just putting in a Fibonacci retracement from the most recent swing high to the swing low, we just got that 62% retracement zone. So we're right back in that zone. A lot of times off of this zone, you can get a sell-off all the way back down to the bottom level here, looking for that double bottoming structure, which potentially could set up some more divergence on some other time frames. But let's go up and take a look at some of the higher time frames to see where we're at on this downtrend. And as we can see here on the monthly chart, all moving averages just in perfect alignment to the downside, the 200, the 50, the 20, and the 10, rolling over to the downside over the last 5 months. Got some pretty good overextension here from that 10-20 period moving average and a breakdown through this level. But if we look at the weekly time frame, we do have a nice bullish candle here. If we do get a break of the high right there, which would put us right at 48.35, if we get a break of that high, more than likely we could be moving back up in and around that 10 period moving average, which would put us right around that 53.54 level, which on the daily chart puts us right back up into this zone right at that level. Right around 54 would be a pretty solid level there, and even around this zone of 51 to 53 would be a fairly nice retracement if we got a break of the high of this bullish candle right here. That would still put us, that's a 48 to 350. That would still put us in the realm of a bearish candle that could set up right in and around this zone right here. So we just need to wait and see and get a very clear signal on whether this trend is going to continue to the downside right here with oil at this low down around $40-$45 a barrel. It doesn't really give drillers an incentive to drill for more oil, so really kind of more than likely at an equilibrium point here where prices need to rise in order for supplies not to continue to accumulate on a weekly basis. As we move down to the time frames here, as you would expect, on these lower time frames, we have a lot of divergence that's been setting up here with these most recent touches on these recent lows. We have higher lows on the indicators, which causes a technical bounce in the price. Then we have all the moving averages rolled up to the top. And so what I'd be looking here is more than likely maybe another move back up to the top here, giving us some potential bearish divergence on the 60 and the 30 minute that might give us a rollover at this point. Or if we do head higher, then I'd be looking on some of those higher time frames, like the daily for some of these zones up here around 51 to 53, going into potentially the next week or so. So that's kind of what things are looking like on crude oil. Hope that technical analysis helps you guys. If you don't understand some of the technical analysis and strategies we're using, make sure you hit the website, rjofutures.com. Take a look at the RJO Advanced Trading Strategy course. We'll be teaching that over 3 weeks, and that'll be coming out next month. So stay tuned for that, and we'll show you a couple of trade strategies to have in your bag to trade the markets technically as we're looking at the price charts here today. So have a great week trading, and we'll look forward to speaking to you next time. Take care.